next discussion I'm truly excited about. There's a book in front of you if you're sitting up in the front here called The Bonanza King, and the author of that book's actually here, and he's going to be speaking tomorrow night. It's one of the best books that I think I've ever read, and it talks about the discovery of the richest gold discovery in the history of the United States, which was the Comstock Lode back in the 1860s, and it fueled much of the growth of America. And Travis Miller, who's in the back of the room, along with Mark Ashley, who's about to speak, have managed to effectively steal the Comstock Lode. There's a mine that was mismanaged and just shut down a couple years ago that they are working to restart, and they also have an exploration story there that could be one of the bigger exploration finds in Nevada. And 4 people in this room own almost 50% of the company, and there's 8 people that own 90% of the company. So it's a very tightly controlled and well-backed company. Mark, come on up. Thanks.
Just a quick disclaimer. The presentation structure, I'm going to be focused on the opportunity, most of this presentation, which is the Comstock Lode in Virginia City, and then we'll talk about the company management, share structure, capital raising. But during this presentation, I'm sure you're going to be asking yourselves if the opportunity at Comstock is so significant, why haven't others thought of it before us? Please keep an open mind, or will become evident. I identified the opportunity, was introduced to Comstock Mining by Ken Mullis, a merchant banker in Los Angeles, basically whilst I was on holiday from Australia. And he'd just invested some money into Comstock, who had just started production at the Lucerne deposit, which is part of the Comstock Lode, but off the main belt. And I agreed that I'd have a look at it for him, and identified some significant issues straight away. Firstly, that they had started mining without a reserve, without an economic study, and more importantly, their production rate, a targeted rate of 1 million tonnes a year for 20,000 ounces, clearly was never going to make money. I rang Ken and advised him that he probably should sell his shares, which he didn't, but he introduced me to their chairman. I went and met him and suggested that they'd lose 1 to 2 million production rate, and that they would need to get up to 4 million. They didn't take that advice. So we developed a strategy to take control of the Comstock Lode. It's taken us 5 years, and patience is really a virtue here, and keeping a low profile. And our OTC listing has its disadvantages, but it had the advantage of maintaining, or being able to maintain, a low profile. They did lose 2 million a month for 3 years. And they kept going back to the market, raising money to support their losses until such time, with obviously share price falling, until such time as they'd run out of support from the market and therefore money, and they had to stop in September 2016. Basically, they didn't know where to go. And we came along and we were the white knights. We said, okay, well, we'll take 51% of Lucerne. We got a foot in the door. And we took it from there. But that was really a foot in the door. The strategy was very much greater than that. And we achieved our primary objective in January of this year, when we were able to acquire 100% of their Story County claims, which covers the main Comstock Lode, as well as 100% of Lucerne. The low profile continues. We haven't completed that transaction yet. We expect to do that by the end of June. So the low profile continues. And look, this is the first conference that Tonogold has ever presented at. We need to go back to the 1800s to just assess this opportunity. 2 Irishmen, Paddy Hannon and John Mackay, about the same time, both Irish prospectors, about the same time, late 1800s. Names are synonymous with major gold discoveries that led to the gold rush to Kalgoorlie, Western Australia, the Golden Mile, in the case of Hannon, and John Mackay to Virginia City with the Comstock Lode. The similarities continue. Both have a strike of about 5 kilometres. both produced around 20 million ounces in the first 20 years at an average grade of between 80 and 100 grams of gold equivalent. Before the physical challenges of mining deeper, 1,000 metres, dewatering and ventilation, and the cost of mining deep curtailed production from both in the early 1900s. The Golden Mile, or now the Super Pit, is owned by Newmont and Barrick, 50-50, Newmont acquiring Normandy Mining's interest, who I worked for a while ago. The added burden of the gold price being fixed for basically 150 years has ensured that this opportunity has remained sterilised at least until 1970, 1980. During the early 80s, after the gold price was allowed to float, there was the gold price went up, and it was getting out of bed, stretching its arms for 20 years, and then in 2000 it jumped out of bed, and there it is today. But the early 80s saw a re-interest in mining exploration, and the Golden Mile was drilled, and which led to production starting in 89, and has been producing ever since. It's added about 30 million ounces of gold to the Golden Mile's production history, so they've produced about 60 million ounces to date. The modern production, the Super Pit, was predicated not on a reinterpretation of the geology, nor new discoveries. It was predicated on mining profitably what the old timers left behind. It wasn't that they didn't know it was there. They're pretty switched on, those guys. It was just that it was regarded as waste. And during that time, nothing's happened. Comstock's remained asleep. Our philosophy for Comstock is very similar to that of the Golden Mile, the Super Pit. The economic climate back then to today is so different. For example, the gold price is more than double in real terms today. The technological advancements that have been made over this period have reduced costs by around 70%, and at the same time increasing met recoveries from about 65% back then to 90% today. All of that combined contributes to to turn a 50 gram per tonne head grade, or the marginal break-even grade back in the 80s, to 6 grams. That's a huge gap, and that's the opportunity, that's the value opportunity that we see. So looking at the Comstock Lode, discovered in 1859, was certainly the best, biggest, richest deposit discovered in America at that time, and probably to date. It was the catalyst that developed San Francisco. It made significant funding to the Civil War effort, about $230 million. And as a result, Nevada was declared a state during the Civil War. And the government provided significant support because of its importance to the region at the time, geological administration. And that gives us today significant maps, plans, and data that we can use to assess what did the old timers leave behind. This is an example of the plan view that was developed back in 1883. Long sections, production records by year, by mine, as well as information gleaned from numerous books written about the Comstock, the latest being The Bonanza King by Greg Crouch, and I've got to say, notwithstanding that Greg's in the room, it is the best book written on the Comstock. So looking on the right, that's the gold vein system that has been mapped to date in red. Of the 20 million ounces that has been produced from this region, 19 million, 97%, has come from a 5-kilometre strike between Gold Hill and Virginia City, as you can see there. Down below, you've got 0.6 million ounces, that's Lucerne, and that's where Comstock focused their drilling. They did no drilling on the main belt, I don't know. And of its total production, 75% came in the first 20 years. The main belt, that 5 kilometres, we know has an average width of about 50 metres and up to 150 metres wide. It dips to the east around 45 degrees, and ore is on the hanging wall, footwall, and in between. It was such a huge deposit that new technology was developed at the time, which I think we'll hear about later tonight with Greg. That's the 5 kilometre strike, looking a long section. And we know the ore goes down to 1,000 metres at depth. It's open at depth because basically, as I say, they stopped mining because there wasn't the ability to go deeper. We have 3 kilometres, of which 9.3 million ounces were recovered during that period. And we've actually taken the production data and assessed the tonnes and grade between the stoped areas, those shaded, the big areas shaded, those were the bonanzas, and the drifts, the drives, which are the lines going across. So average of 47 grams of gold recovered, head grade, between the two, 94 grams stoped and 32 drives. So looking at the drives, I won't actually dwell on this. These numbers are pretty remarkable, but to be absolutely truthful, they don't give us a lot of insight into what the old timers left behind. It's a nice to see. They were mined out. The bonanzas are gone. Now, if there's another one, that's great. There'll be cherry on the cake, but it's not the main issue. One thing I would like to point out is this area in red here, Belcher. During our research, we found a report by the mine superintendent from Belcher back in 1880 to say they'd made a discovery of high grade. You've got to put high grade in context of what they were mining at the time. In that area where the star, they've got it pretty well mapped out because they're talking how many metres or feet away from this shaft and that shaft. We know exactly where it is. Now, they followed that for 3 months, but the water inflow, they couldn't manage. They didn't have the pumps that we had today, and they abandoned it. We know there's high grade there. No one has ever followed up on it. This is the first time we've actually seen that report in terms of the grade. So looking at the drifts, this is really the key to our assessment so far. The drifts today are very different to what they were back in the late 1800s. They were actually the old timers' exploration. They didn't have drill rigs back in the 1800s, so they weren't able to drill, before mining. They used sunk shafts and developed drifts from those shafts in pursuit of finding a bonanza. So they were a necessity. Unless, if you didn't do a drive or a drift, you're not going to find a bonanza. So it was an investment. As a result, the 50-gram head grade that we talked about earlier isn't relevant here. The head grade that would be necessary for these ores, or the ore that's mined from the drifts, to be taken to the surface and had processed is more like 24 grams equivalent at that time. That covers the cost of processing, puts a little bit money back into the miner's pocket for a contribution towards the mining cost. We've actually broken that down by mine, as you can see here. And what's interesting is that all but one, Yellow Jacket, the grade is above that 24 grams. And there's reasons why Yellow Jacket is lower. We won't go into that. And what's also important is that they're all below the 50 grams, and that's why there wasn't, they weren't followed up by stoping, except for one, but that's a very small tonnage. And the average grade, 32 grams, that equates to, it's actually 18 grams of gold and 320 grams of silver. That was the head grade, average head grade from all the drifts developed up to 1920. And in today's ratio, that equates to 22 grams of gold equivalent. The drifts were driven, the profile 2.5 metres high, 2 metres wide, and driven laterally every 100 feet, 30 metres. And that distance was the distance that the old timers believed was optimal to be able to snag a bonanza. Anything greater, they may miss it. Anything smaller, it was just too high a cost. So the question is, how much of what they've left between the drives is the question that we have to ask today. So looking at the long section on the left, that actually masks the fact the two-dimensional profile hides the fact what's going on behind. So that line here is actually, that's the drives that we see on the plan view. So the drives are a lot more that is predicted on the long section. We've calculated the amount of drives to have been around 200,000 meters, well, about 130 miles of drives. That's 2.5 million tons. And as we said, 2.3 million tons was actually treated. So what does that mean? That it means that only 10% of all the drives that were developed fell below the 24 grams, and therefore didn't make it to the surface, didn't get processed, therefore not included in any of the production numbers. How below 24? We don't know. Is it above the 6 grams that we have today? We don't know. Or in other terms, 90% of the drifts that were developed had an average grade of 18 grams of gold and 320 of silver. So if the 2.5 metre high drive yielded 2.3 million tonnes, then mathematics shows that the 27.5 metres between them, there would be around about 25 million tonnes. Now, we don't know the grade by level. If you just took that average grade that we're talking about here, you're talking 20 million ounces. Now, I'm not saying that that's what we have. The issue is that this only represents about 60%, 67% of the area. Only 67% was driven. It doesn't include potential bonanzas. It doesn't include depth extensions. And it only looks at a width of 2 metres. Now, those widths were minimised because of the cost. What's beyond that, we know that the grades do gradually reduce below that 2 metres. So we expect them to be wider, but lower grade, more ounces. This is an example. A block cave back in the 1920s highlighted that there was about 7-8 grams extra at about 9 metres, in addition to the 4 metres that was taken out by the stopes. So the evidence is supporting the fact that it's not dead, it's very much alive, just been taking a long break. Drilling's the only real way to determine the significance. With this, being one of the richest, most significant discoveries in America, you would think this has been peppered with drilling. Notwithstanding they didn't have drilling back then, but there has been obviously now. The answer is no. There has been a lot of drilling by Comstock at Lucerne, but not on the main belt. This is the total extent of the drilling on the 20 million ounces that had been produced. Now, you see there's some deep holes here. Otherwise, we're talking 40 metres on average. That's it. The whole area, no drilling. Now, what's interesting is when we put those drilling into the MDA database, those deep holes, it's clear they were stopped about 30 metres short of the ore body. So they're completely irrelevant. And of the little drilling from the surface, you've got some really interesting results. Back in the 70s, 23 metres, 23 grams gold equivalent, 15 metres, and in 84, you got 33 grams. So our drill program that we're planning is 21,000 metres. 72 holes, $4.4 million budget. And half of that is going to be spent in the first 6 months. We believe that the confirmatory aspect of this drilling is confirming really the concepts and what the records are showing, is going to provide us with a significant re-rating. And after that, we'll be looking at taking the company to the TSX. There are other areas within the Comstock belt that we're focusing on. This here is ground to the east of the main lode, and we're, an individual who owns part of it down the south, who, looking to do a deal with us, did some drilling back in the last year, and got high grades. Lucerne, as I say, was a means to an end, so I'm not going to dwell on that, but the 4 million tonnes MDA are showing it does make money, about 200 million. The question, if the potential of Comstock is so significant, why haven't others picked on it before? Tono? Well, the fixed price, as I say, sterilised the opportunity for 150 years. The ownership was very much fragmented until Comstock came along, and they actually did a great job in bringing the owners together and taking them. And then, of course, there was Comstock. They've just missed the opportunity. The fact is no one has, because if they had, at least they would have had there'd be some more drilling in the Comstock than is shown to date. The new agreement with Comstock, we've paid them $11.5 million for 100%. We've paid $3 million, we've got $8.5 to pay. We're looking for around $13 million to fund that and a 6-month budget. We've got a small debt facility of $5 million, so we're looking at equity of $8 million. Now, we've been private. We're effectively a private company, OTC. We've raised $10 million from our shareholders since I took control in 2013. And look, we're certainly getting a lot of interest from numerous people, so we're now looking at raising that $8 million through a convertible note, 18-cent conversion, with interest and warrants. And anyone interested, we'll be happy to talk. Board, management, I've been in mining 30-odd years, made mistakes and, learnt from them. And I've got a great team, young guys that, provide a great mix between the old guy and the young. And just looking at the share structure, the management have got 50% of the company. We do have skin in the game, and I think Rob's point is very valid. We're not here to make money from our salary. We're here to make money from our investment. So our interests are aligned with investors. Palisade have got 10%. Ken Mullis, who put me in touch with the Comstock story, he's got 8%. He didn't sell his shares, but he's going to make more from Tono. And Tookie Angus, 11, and there's, as I say, a number of people here in this room that have become investors recently. So thank you for your interest. We're here all week, all weekend, and happy to, thank you.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?